Hello and welcome to the TCS podcast, where we are dedicated to helping you achieve extraordinary growth and success to create a lasting impact on your families, companies, and communities. I'm Eric Guy, president of TCS. With us today, I'll introduce her to you all. Gerri Detweiler. She's a nationally recognized credit and financing expert with almost 30 years of experience as a consultant for NAV. She develops programs and content to help small business owners build credit, track cash flow, and understand financing options. She's written 6 books, and her work has appeared in Yahoo, MS Money, ABC News, CBS News, NBC News, The Today Show, and more. She's done almost 5,000 interviews, and I could go on, but welcome, Gerri, and thanks for pouring into our community for a little bit.
Well, thanks, Eric. I'm glad to be here.
Yeah. So, if somebody asks you what you do, like what would you tell us, like, is our community, so we would pay attention to you a little bit more?
Yeah. So I try to help business owners understand, manage, and build their business credit as well as their personal credit so they can increase financing options and get better financing options, because that's really key. There's lots of business financing out there, but there's a lot that's very expensive, and that will really affect your margins in your business. So we want to put the business owner in a position where they can leverage financing the right way and also keep those costs under control so they can make more money at the end of the day.
Mm-hmm. What do you see as kind of the pitfalls of, just like, if you're speaking to some of our contractors who are in that like $2 to $5 million range and are trying to get finance to grow, what are some pitfalls that you normally see?
It can be a tough business to get affordable financing, and every job is a little different. So that makes it more challenging than a business that maybe has very predictable, revenue, predictable expenses. It varies a lot. So there's 2 things, well, actually 3 things that can happen. So first of all, I would say if you're not leveraging your suppliers and their credit to your full advantage, look at that, because your suppliers likely want to keep you doing business with them. And so they often offer some of the best financing terms out there. In other words, they may not even charge interest. It may just be if you pay us really quickly, within 10 days, for example, you can get a discount. But if you pay us in 30 or 60 days, then you'll pay that full amount. And either way, that could be very attractive financing. What happens, so suppliers are the first thing. And the second thing is that many suppliers, not all, but some of them report to business credit bureaus. And if you pay on time, that can build your business credit. It's a little different than personal credit. We can get into that if you'd like, but it can build your business credit, which in turn can give you leverage to get better terms with those suppliers. So as your business develops that credit and that relationship, you want to move from, say, net 15 terms to net 30 terms, maybe even to net 60 terms, because what that does is it helps your cash flow. Instead of having to pay for those items quickly, you can hopefully pay for them out of the cash flow when you've, completed the job or reached the next milestone and gotten paid. So that's really the foundational step, and that really ties into business credit very strongly, but it's kind of invisible to a lot of business owners. And Eric, I've talked to businesses that have been around for 10, 15 years, and they really don't understand business credit because it's not as visible as the personal credit side of their business. And then the second thing I would say is the faster you can get financing, the more likely it's going to cost you more. So those offers you will get as a business owner that say, we can get you financing in 24, 48 hours, just click here. That can be helpful, but it can also be very expensive. That can definitely affect your margins. And then the third thing I would say as a business owner is credit. It's not business credit is not magic. Like, it's not a magical cure if you don't have good personal credit or if you're struggling financially, but it adds an additional layer of leverage for your business because it can spill over to things like the contracts that you're able to land, to the insurance that you get and the rates you pay for your insurance, to financing as well. So it's something you do want to have on your radar if you haven't been paying attention.
Now, do you find that, and I think you said this in a different way, but do you find that most business owners just don't pay attention to their business credit? And then I'm going to ask you, we'll go back to the difference between personal and business credit as well.
Yeah, I've been around this business, the credit industry for a long, long time. And business credit's actually been around longer than personal credit. I mean, Dun& Bradstreet, Abraham Lincoln worked for them back in the day, and they're one of the big business credit bureaus. So they've been around a long, long time. But there's no regulations like there is with personal credit. There's no requirement that they tell you, give you an annual copy of your credit report. There's no requirement that they tell you, in many cases, not in all, but, oh, hey, we turned you down because of something we found in your business credit, and it's not free. So at least through the credit bureaus, for the most part, Dun & Bradstreet does have one product that offers a limited free view. So for business owners, it's one of those things you don't usually find out about until it causes a problem. And so instead of being proactive about it and saying, hey, I'm going to check and see what's on there and then build my credit, you're left to figure it out after the fact. And even then, it's not always super easy because you just don't have the same level of transparency.
Yeah. How, just interest, like, may pretend that I don't know anything here. How are those business credit reports compiled? Like, what are they using?
Yeah, there are three major business credit bureaus, Dun & Bradstreet, as I mentioned, which is just strictly commercial credit. And then there's Equifax and Experian, which also have commercial divisions. So you have your personal credit reports with them. You can also have a business credit report with them. And then it's similar to personal credit. A company will report payment history to them. And then companies purchase credit reports from them. They can also pull in a lot of other data, for example, financial data that might be publicly available. Some will use different sources that may gather news about the company, about the industry. And that's one thing to keep in mind with business credit that's a little different than personal credit in that you have a very strong industry focus. And that's true with lending as well. So, and you probably know this, your lender's going to look at the industry trends as well. So it can be, contractors in Southern California or contractors in, Northern Florida, South Georgia. It can be just contractors in if you're in the paving business, for example, it can compare you to that. So there's industry risk factors that come into these credit reports as well as just strictly your payment history. And so you want to kind of understand that because when you go to check your business credit, one of the things you may see is your industry code, your NAICS code, NAICS, or your SIC code. These are codes the government developed just to track industry statistics, but they're now kind of a de facto, almost like your social security number becomes for your
Yeah.
personal. It's
Right.
kind of de facto for the industry. So you want to look at that and make sure it's accurate. Where do you make your most money? If you make your most money, in remodeling, then your NAICS code should reflect that. If you make most of your money through paving, it should reflect that. If you're heavily involved in government contracting, it should reflect that. And the reason is because it evaluates your business in conjunction with the industry you're in as well.
Yeah. And you said they are not free to access, correct?
For the most part. Now, Dun & Bradstreet does have a free version of a product that will give you a summary, and you can monitor that, so that's good. For the most part, you pay for your business credit reports. There's no law that says they have to give them to you for free. And I was in the consumer credit field for a long time before I joined NAB about 11 years ago now. And NAB was the first place, sort of like Credit Karma, but the first place to give it business credit information for free. And so with NAB, you can get a summary report and a letter grade indicating your overall credit standing with the major credit bureaus. If you have a report. Again, businesses will discover, hey, I don't have a report just because I don't have accounts reporting. And so then they have to get in the process of building that business credit.
Yeah, because that doesn't happen as natural as the personal side of things.
Correct. You get a mortgage, you get a credit card, you get a personal loan, it's going to show up with all
Yeah.
three credit bureaus, not necessarily with business credit.
Yeah, and I do think, Jerry, I think especially new business owners, we don't understand that sometimes. We just think it's going to happen, and then you go, and it's like, as you said, it's like, oh, like now we're in trouble. Like we, we thought we were doing this. So it's interesting. I do want to hit on what you're doing with Nav too, because I think that's pretty important. You mentioned that, but just give us kind of a rundown of that, what Nav is, what it does, and what the resources are there that we might be able to tap into.
Sure, sure. So NAV was co-founded by a serial entrepreneur whose first business was sign manufacturing in rural Idaho. And he went through all the pain that small business owners do with cash flow, with credit, and with business credit. And eventually that led to several businesses and led to founding NAV. So this place to check, manage, and monitor your business and personal credit in one place, and then to also monitor your cash flow. And ultimately, the goal is to build a financially healthy company and to not let credit be a tool rather than a hurdle, right, in this process. And so NAV is unique in that way. There is a completely free offering as well as a paid one. And with the paid ones, there's different levels, but with the paid ones, NAV submits that payment each month to the major business credit bureaus as what's called a trade line. So trade line is just an industry word for an account that shows up on your credit. So it's a way to start building that credit. And one thing I want to emphasize here is, sometimes you may come into this business or you may have bad personal credit, and there could be a lot of reasons why. But you can build business credit even while you're working on your personal credit. So I think both are vitally important. We have plenty of research on that from the Fed and even from lenders that NAB works with, where you need to pay attention to both. You need to work on both. But if you don't have good personal credit, it does not have to be a hurdle for starting the process of building your business credit, because there are options that don't involve your personal credit check. So that's another thing to keep in mind if you're feeling a little daunted about this process.
What are some financing options business owners could possibly be overlooking?
Comes to, your contracting business, I'd say, first of all, the supplier credit, don't overlook that because that's really important. And then the other thing I would say is if you're not leveraging business credit cards, think about that. Just strictly from a cash flow perspective, depending on how you time a business credit card purchase, it could give you 45 days, even 60 days to pay for that, whatever it is, out of cash flow. And I I've talked to business owners who are sometimes hesitant about credit cards for a variety of reasons, and maybe they've been burned, whatever, but or maybe they've, had some problems in the past, but think about that. But if you do, keep in mind that any employee that you give that credit card to is now authorized to use that card. And you are not authorizing on a specific purchase by purchase level. Typically, you're authorizing them to use the card. So you want to make sure that you're staying on top of that and make sure that you are monitoring those purchases, setting up those limits that many credit cards let you do, so that you don't end up with an employee who goes rogue on you and charges things that you're going to be on the hook for. And I've heard plenty of stories from business owners where that happens.
Absolutely. Yeah. Yeah. How can business owners determine which financing's best for their business? Is there any advice you have there?
Yeah. So first of all, I would, again, make sure that you know where your credit stands and your cash flow stands. But one of the keys to getting better financing is better financials. And so I just listened to your episode with Laura Furtado. That was really,
Yes.
really good. And she talks about this. And if you're not working with an accounting professional or you don't have a system in place to know your numbers, and to be able to produce those financial statements, then do that, because that kind of information helps you get to the next level with better financing. Most of the best financing that's available to business owners is through financial institutions and online lenders who will take your financial situation into account. In other words, they're not just looking at credit. They're not just looking at what you put down as the revenue numbers, but they're looking at your cash flow and they're looking at what your bank statements say. So that piece of the puzzle, the sooner you can dial that in, it's not only good for the financial health of your business, but it's good for the financing for your business. And one thing I learned, I was talking recently to a former commercial banker who's now doing business advice, and he said, one thing I noticed as when I was making business loans was sometimes I would notice the business owner wouldn't ask for enough. I could see that down the road, a couple of months, they were going to run into trouble financially. They were not going to have enough cash flow to maintain their payments. So it's not always, oh, how much can I get? But it's how much do I need to make sure that I can pay this financing back on time? And how does it affect my margins so that I can make sure I'm still financially healthy? And this is not the fun part of running a business, right?
No, I'm smiling because like I ran into this years ago with myself. Like I just didn't, like, I just thought I needed a certain amount, right? Which is what I needed, and we were fine. But I wish somebody would have said, "Hey, look into the future. Let's forecast a little bit here. What do you think you might need in this, and that?" And it wasn't a hard position. I just wish I would have had it then. And like I didn't, it was it was a little bit of mess. I can't imagine what it would be like for somebody, that just runs into that and really, really needs it, in a
Well,
different situation. And then it's like, oh my goodness, I could have done this way back here. Why didn't I think of that? What are some things that we might not be thinking about that we need to kind of keep in mind there?
Well, one other thing to keep in mind with business financing is this is changing. Now, this is changing, but up until recently, business lenders and financing companies do not have to tell you an APR, an annual percentage rate. And that's what we use in consumer lending, right? You say, what's your mortgage rate? You're referring to the APR that you're getting. What's your credit card rate? It's APR. In business lending, they have been very creative. Now, there are some states that have been passing state laws to try to require an APR for most types of business financing, not necessarily all of them. But what happens is then it seems like it's better than it is. So, for example, let's say you get a company that says, "Hey, we can give you a business cash advance. We can get you funds in 48 hours. All we need is your bank statements. We're going to look at what you pay, what you've been bringing in, and then we're going to advance you money based on that." And they say there's a factor rate of 1.2. Okay, 1.2, that sounds like good. I mean, if you're thinking APR, you're thinking that's
Yeah.
really, really good, right? But that could work out to what it means is you're paying 1.2 times the amount that was advanced, and you're paying that back no matter how long it takes you, how fast, how slow. And then they take a little bit off of your next sale. So they take it right out of your bank account until you pay it back. So depending on how long it takes, that could be an equivalent APR of 25%, 45%, 100% or more. And so if you don't know that, then again, you're not really seeing the full picture here. All you're seeing is, hey, I got this deposit. Now they're taking this money out of my account. My cash flow is affected. And I don't really understand how much money how much this is costing me. So that's one of the number one things I want to say about financing is look into it before you need it, because when your back is against the wall and you have to make payroll, or you have to pay those contractors or subs or whatever you have to do, you're going to be much more likely to take that fast financing that may be more expensive than what you could get if you planned for this and shopped around.
Yeah. Before I forget, Jerry, I don't know all of your 6 books, but is there a specific book that you would recommend to our contractors?
Yeah, my book that relates to this topic is Finance Your Own Business, and that's with a small business attorney, Garrett Sutton. It is in a revamp process because it's what brought me to NAV, so it's 10 years old at this point. But the basic principles are still applicable, and then there's a ton of free resources at NAV as well that are up to date because we're working on them every day.
Yeah. Um, where do people find you, Jerry? Like, how
So
can we get in touch with you?
I have a page with a free guide to building business credit. It's at nav.com/Gerri. So my name is spelled G, not J, Gerri. And so if you go to nav.com/Gerri, you can download the free Building Business Credit Guide. And my goal is to keep it as simple as possible. So as fast as possible, as efficient as possible, because I know you have other things you'd rather be doing in your business than worrying about your credit.
Yeah, I was reading through some of your stuff, and the term credit ghosts came up. What are credit ghosts?
So that's a very common scenario where someone just does not have much credit. They don't have enough to create a credit score. And I actually heard last week, Eric, from a business owner who reached out to me because she was checking her credit through NAV's free product, and one of her credit grades was really low. And she's like, what happened? Do I have to worry that I've been a victim of identity theft or something? And I said, yes, you should check and see what's going on. But very likely it's low because there's just not enough information reporting. So you're probably going to need to get some accounts that are showing up on a regular basis with the credit bureau, because that's the only way to predict a credit score, or create a credit score, whether it's personal or business. They need to know, how have you paid in the past? And they use that to figure out how you're likely to pay in the future.
Just a couple more questions here. I always like to go over this one, like what, and I always, you mentioned Lauren too. We go over this as well, but what are some common myths that small business owners believe that you hear a lot?
I think when it comes to credit, one myth is I've never heard of this, so it doesn't matter, right? I mean, I haven't heard of it, so it's not important to me. And
Doesn't
again,
exist.
these credit bureaus are big businesses. They're collecting our information. You at least want to see what they say about you. And then I think another, myth is I have to have good personal credit to build business credit, which I've already told you is not necessarily required. And again, the third one is financing is one of those tricky things. It's sort of like, it's not fun. It's like accounting for most of us. It's not super fun. And it's also one of those things where I think we have this mentality, because on the consumer side, we have such a mentality that debt is bad, right? And so we don't think about the opportunity that credit offers. But on the business side, that's very, very clear that to get to that next level, a lot of times it takes some type of financing. And that's where, being prepared comes in. Another thing that happens with business credit is when you're going for the bigger contracts, a lot of times they will check business credit. So whether it's I've talked a few years ago to a landscaper who was going to work with a chain of shopping malls, right? And do landscaping for the shopping malls. And his business credit was a factor that was creating some hurdles for him to get to that next level. So that it can also be checked for those types of things, just so someone can see, are there red flags? Are there unpaid bills? Are there more UCC liens than we expected? Is there something that would lead us to want to say we can't take a risk that this business can't fulfill, the job? And then if you, as a contractor, are working with other businesses, I would recommend you think about checking credit, because I'm a business owner. I have been burned by a business partner who looked really good on paper, never paid me. It was at least 40 grand. I never found out the total number that he actually owed me, in the sales that we made that he never paid me for. But this can happen to you too, right? You don't want to take on a job and then discover that they can't afford to finish paying you for things you have laid out money for. So it goes both ways for many business owners.
Well, good stuff. I appreciate you coming on. Any last words for our contractors?
Just figure out this money stuff, and it's going to make your life easier. I don't love it either. I know I'm in the financial field. It's not fun. When I started my business, I was always chronically late on my accounting. And, now I'm so proud of myself getting it in, at the right time and paying attention to the numbers. But it just makes everything run more smoothly. Like, find out the system that works for your business. And if you need to, get help. But all of that, it all ties together. It makes a much easier, smoother business when you have this money portion in place and running smoothly.
Good stuff. Thank you again. Appreciate you being on the show. That's a wrap for today, guys.